Hi, it's Tanya Taylor, founder and CEO of Grow Your Wealth TV. In this video, I will be discussing 3 pros and 3 cons of paying off your mortgage. If you're new to my channel, please subscribe and hit the bell to be notified when I post new content on Fridays and on Sundays. My channel is all about saving, demolishing debt, and investing so that you can have a worry-free retirement. Now we're going to jump right in and we're going to talk about the pros first. Then I'm going to talk about the cons, and then I'm going to share my personal view and what I think about my mortgage and what I would do in today's environment. Now, there are lots of schools of thoughts out there about whether or not you should pay your mortgage off. There are some people that say to you, pay your mortgage off. And there are others that say, are you nuts? You should not be paying your mortgage off now because interest rate is too low. How do you siphon through all of that to decide what you should do? And I always go back to saying everybody's situation is different. It depends on your level of comfort with debt. It depends on what you want to do in retirement and so many other things. So I'm just going to now jump into what are the pros of paying off your mortgage. So the first reason is a part of their retirement planning. Someone might feel that when they retire, their income is going to be less. So the tax benefit that they would get from deducting the interest that they pay on the mortgage and the taxes that they pay on the mortgage will no longer be there because their income is going to be so much lower, so they won't be able to take advantage of the tax benefit. Therefore, from a retirement planning perspective, it doesn't make sense to hold on to that mortgage. Now let's talk about number 2. Some people just want peace of mind. It's a psychological thing. They don't like debt. They don't care how much it's going to cost them. And when I say cost them, I mean the opportunity cost of being able to use that money to invest it and get a better return. They don't care about that. All they want to know is that they no longer have this mortgage, so that in the event that something were to happen, they know that their house is paid off. So if this person were to lose their job or become ill, this individual would not have to worry that they have this large mortgage that they need to be concerned about in that situation. They know that it's already paid off, and the only thing that they would need to pay is their taxes and their insurance on this property. Very legitimate reason, and for some people, as I said before, psychologically it makes a big difference, and that's a worry that they no longer have to be thinking about. The third reason is that if you pay your mortgage off early, either because you did a bi-weekly payment or you switched to a 15-year mortgage, then the amount of interest that you'll be paying on that mortgage over time is going to be a lot less than if you held that mortgage for 30 years. And therefore, the cost of the mortgage is less. And for a lot of people, when they think about how much interest they're paying on a mortgage, it's easier for them to rationalize paying it off early, getting it over with, and using that extra money to put it toward their retirement or whatever other expense they may have. So here I just covered the 3 pros of paying off the mortgage. And as I said before, it's really based on a person's outlook and mindset on where they are and where they want to be. So now let's talk about the cons of paying off your mortgage. The first one that I want to talk about is savings really savings? Interest rate is so low now that people are getting mortgages for under 3%. So are you going to have an interest expense? Absolutely. There are 2 things that I want to talk about as it relates to that. One is, because interest rate is so low, the money that you would be using to pay the mortgage off, you can actually invest that money and get a much higher return. So in this case, the cost that you are incurring, or the opportunity cost for paying off your mortgage, is that if you had a mortgage at 2.5% and you could have invested this money at 6%, you're not getting that 3.5% interest on that investment. So that's one of the cons. So technically, while you think about it on paper that I'm not paying interest over 30 years, I'm paying it over 15 years, you're not thinking about the opportunity cost that you're missing, that if you took that money and you invested it and you were getting 6%, you could have still used that money to pay off the mortgage over time and still have an additional 3.5% interest, where if you compound that interest over time, it could add up to quite a lot of money. It is only with good tax planning and wealth building planning that you would uncover these things. If you're thinking about it just in silo, then the benefit or the perceived benefit that you think you're going to get is just not there. The other piece to that is a dollar today is not worth a dollar in the future. So let's say you had taken out a mortgage in 1989 for $2,500. That $2,500 in 1989 is now worth $5,331 in today's money. So you are getting cheap money when you hold on to your mortgage and pay it over a longer period of time due to inflation. That's another thing that people really don't think about, is inflation and how that benefits you when you hold a mortgage. The second con to paying off your mortgage is a tax benefit that you would get. Now, I know the tax law changed a couple of years ago, and some people don't really get the benefit that they would have gotten under the old rules. But there are still a lot of people who get a tax break from having their mortgage. So you're able to deduct your mortgage interest. You're also able to deduct if you have a home equity line of credit and you use that money for repairs, you're also able to deduct that. When you pay your mortgage off, you are no longer able to take advantage of those benefits, and therefore you're put in a higher tax bracket. From a wealth building strategy, that may not be the most prudent thing to do, even though from a psychological perspective, it makes sense for you. Does that make sense to you? I would love to hear from you. Comment below. Let me know what you think so far. The last con is the 15-year versus 30-year mortgage. This is one of those areas that it sounds great to say I'm going to take out a 15-year mortgage. But what happens if something unexpected happens and it's for a longer term? You have locked yourself into this 15-year mortgage. Usually, unless it's an adjustable rate mortgage, your payment is going to be fixed for the 15 years. You have not allowed yourself the room that if something unexpected happened, your mortgage rate might be a little bit lower and it would be more affordable, and you might be able to hold on to your house. Because if you're locked in this mortgage, your payments are generally higher and there isn't really much room to reduce those payments. Whereas if you decided to keep a 30-year mortgage, if you still wanted to pay it off earlier, you could have still done that by either doing the bi-weekly payment or the different options that are available, but you would still have that flexibility so that if some situation were to arise, you're not locked into this 15-year payment as opposed to having a lower 30-year payment. So I do see that as another con of getting a shorter term mortgage that you want to pay off. So what do I say and where do I stand? Again, this is very individualized. It's going to depend on what you're most comfortable with. If you're an investor and you're thinking long term and you're thinking, how do I maximize my limited resources that I have? Then chances are that you're not going to choose to pay your mortgage off, because you're going to see opportunities that exist where right now interest rate is so low, like you're literally getting this money for free based on inflation. So you see where you can take any extra money that you would have and put towards the mortgage and you can invest it. And people might say, well, there are risks to investing, so I can take this money and investing and lose it. And that is true. So there is a certain element of risk that I will not deny that exists in you investing. But historically, we see that the stock market has always had a positive return over the long term. Also, you don't just have to invest in stocks. You can invest in ETFs, which are a little bit more safe, an index fund, and still have a great return. There are also real estate investment trusts. There are other investment vehicles that you can use. So if you're planning longer term and you're looking at your picture holistically, paying off your mortgage might not be the highest priority. You might find other things that you can do with the money. The flip side of that is if you're someone who really needs a peace of mind and you just say, I don't care about any of these things, psychologically, I just feel better knowing that my mortgage is paid off and I own my house free and clear, then you're going to choose that option regardless of what's available. Interest rate could be 1% and you'll probably say, no, I'm good. I'm going to pay my mortgage off. It's really dependent on you. And I think that once you get the necessary education about the pros and cons, and if you're still feeling that you want to pay off your mortgage, then go ahead and do it. It's no right or wrong answer. It's no. I just hesitate when I hear people say like you must pay your mortgage off first before you do this, because that's not always the right answer. And you just need to understand and be educated about what your options are, and then make that decision based on those options. Where do I stand on this? Okay, woo. I'm glad you asked. I am definitely not paying an extra penny on my mortgage to pay it off early, because for me personally, looking at my picture holistically, it does not make any sense, because I know that I can invest that money and I can get a much higher return. Now, for my personal home that I live in, I just would not touch it. Whenever it gets paid off, it will get paid off. That being said, investment property, taking the cash out at 3% and being able to use that to invest and get a much higher return is a much better option for me, because this is like literally cheap money. You factor in inflation and you're paying nothing on taking cash out of the property. The biggest thing for me is making sure that the rental income from the property covers my expenses so that I never have to go in my pocket, and also just that I am still getting some revenues from that. But to be quite frank, even if I wasn't getting revenues from the property and it was breaking even with a cushion, then I would be okay with that too, because I know that I can invest this money and get extra return in the market however I decide to invest it. So that's where I stand on that. But again, that's because I am an active investor. I look at my picture holistically. I don't just look at one component of it. I'm looking at the big picture and seeing how I can maximize my limited resources. I hope that you found this helpful. And if you have any questions, if you totally disagree with me on some of this topic, I would love to hear about it. And if you agree with me and it makes sense to you, I would also like to hear about it. Please share my content. And if you have not yet subscribed, don't forget to subscribe below, and also hit the notification bell so that you can be notified when I post my videos on Fridays and Sundays.